users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams. Learn more at tokenmetrics.com.
Hi, we are live. Welcome to the Monday Token Metrics live stream brought to you by tokenmetrics.com. I'm your host, Bill Noble, joined by my colleague, Forrest. Forrest, good afternoon. How are you?
I'm doing good, Bill. You know what I'm doing right now? I'm going on my phone and I'm going to the live stream. I'm tuning in on my phone and I'm hitting the like button, and I'm also hitting share, and I'm going to tweet this thing out. I'm going to tweet this thing out on Twitter, and I would genuinely appreciate it. We'd be very grateful if you guys did the same. Drop that like button or hit that like button. You can drop a like. I don't know if you can drop the like button, but you can hit the share button and share it out on Twitter as well.
All right. Thing about Forrest is, folks, Forrest is smart in multiple ways. He knows charts, altcoins, and marketing. He knows what he's talking about. So let it rip there. I see Sugarland is in the house. Jan, Brandon, Farmer Sam, Mark, welcome. Kevin Dam, Momo,
Shout out to
Montero.
King T in the chat. King T in the chat. He's a regular here.
King T, welcome. All right, folks. As Forrest said, give us some love. It helps us help you. And that is what we are here to do on all Token Metrics live stream, on tokenmetrics.com, and on Token Metrics TV. Let's go ETH. I agree. So without further ado, if I haven't missed anything, let's tear in to your market update. $100 trillion. What's $100 trillion between friends? 12% inflation for the rest of your life? How would you manage that? What would you do? We are here to help. So, central bankers at a climate change conference. Fascinating. Janet Yellen, former Fed chairman, who never met a printed dollar that she didn't like, now Treasury Secretary, is sounding incredibly cool at a climate change conference, talking about printing $100 trillion to solve the planet's problems. So if you're wondering why the market is up today, green across the board, that's a real interesting number, considering we used to think 6 trillion over 12 years was a lot. Then we thought 6 trillion in a month was a lot. And now it looks like they're going to do 6 trillion a year for the rest of our life. Now, meanwhile, back at the Fed governors are quitting. Another one bites the dust in the bottom right. What does that mean? Well, that means that the Democratic administration, sort of like Supreme Court appointments, they can just put whoever they want in the Fed and turn it into money printing central. Hedge fund CIO in the bottom right-hand corner, according to Zero Hedge, once you say 150 trillion, it doesn't seem so big. Now, let's read into that. And let's take a brief moment, and I'm going to give some respect to Treasury Secretary Yellen. In order to keep Social Security and Medicare going in the United States on a sustainable basis, we're going to have to print, guess what? 100 trillion. The National Review estimated 89 trillion. And with inflation, Janet just threw in an extra 11 to make it either 100 or 150. So that number was going to hit the marketplace. And what better way to disguise the number than talk about climate change? Because you can buy a lot of batteries and windmills for 150 trillion, but really that's what's going to be necessary to keep the United States going. Now, with that said, let's take a new view of total crypto market cap. So total crypto market cap broke out above 2.6 trillion. It hit 2.4 or 2.5 And then it turned around and went to 3.7, or it could go to 3.7 trillion. Now, I know it's a green day, right? Monday, November 8th, if I've got my date correct. So you're watching this Monday, November 8th, and you're asking yourself, okay, everything's green. Should I FOMO in for it to go up another 1 trillion? Well, in our best estimate, you should probably try to buy the dip in, say, Bitcoin or ETH. But there may be other alts that may just start going. If you want to know what those alts are, stay with us because we're going to cover it in depth. But the bottom line is the government's let the cat out of the bag, and total crypto market cap can expand by 1 trillion. Now, SHIB. Very important concept here for the market cycle, which we'll talk about later. What do you do if you missed SHIB? Well, my guess is as smart money is selling or as smart money moves money around, people may come in and try to buy the dip in SHIB, and retail may try to take it to a new high. Psychological number at 30.0001. Did I get that right? 3 zeros in a 1 seems like a logical even number if SHIB takes off. So if total crypto market cap can go up 1 trillion, I would guess SHIB's going to have to participate. But the key point about SHIB is this. If you missed it and you're still upset about it, in other words, if the mere mention of SHIB makes you upset, be careful with that. Because you know what? There's always a SHIB out there. There's always a big trade. All SHIB was a big trade that we saw smart money doing it. It was the bigger the base, the higher in the space, and we just missed it. So the key is don't miss the next one or the next 3 because they may be bigger. More on that later. Now, total crypto market cap, excluding Bitcoin and Ethereum, drum roll, is now above 1 trillion. It closed above 1 trillion over the weekend, and now it's holding there on a dip. Now, is $1 trillion for altcoins a lot of money? In other words, is the altcoin space overvalued? Because I've been asking this question myself. Is it overvalued? And then I was like, I saw a headline that said American U.S. total credit card debt is 1 trillion. Now, what's more valuable? Loans to the U.S. consumer, an unsecured loan or unsecured loans worth 1 trillion, or altcoins, which even if a lot of them are no good, some of them are going to have very clear functions like big tech stocks. So if unsecured loans to people who don't technically have to pay them back is worth 1 trillion, then perhaps altcoins at 1 trillion isn't as ridiculous as some people would think. So that's not an excuse for FOMO, but if everyone's talking about 100 trillion, why am I worried about 1 trillion for altcoins? I just stopped worrying about it. I'm still going to chart the market, but it's not in a big number anymore. It's not. Now, what has been the best way to play crypto up until now, and what does it tell us about the future? So, Galaxy Digital, yes, my pet project, Mike Novogratz, okay, a crypto hedge fund has given you better returns, okay, stock traded out of Canada has given you better returns than any big cap crypto really for the last 2 weeks, right? I mean, this thing has been on a rope since it broke out at 2350. It's at 42. I'm feeling the need to put a lampshade on my head, so I'm probably going to take profits on my idea, even though I think it can go to 48. So I would love it if I said on air, you know, I'm going to slow my roll on this, and I would love to have it go screaming through 48 and go to 60. But that's okay because fortunes are made by buying low and selling too early. MicroStrategy was up a lot earlier, coming off a bit. A brief reminder, MicroStrategy is Michael Saylor's firm. He has untold billions in physical Bitcoin. Just a reminder, if you were going to try, or you as in anybody, as in Apple, as in whoever, was ever going to try to get as much Bitcoin on their books as they could, the only way to do it without sending the price to 250K is to buy MicroStrategy, the company. In other words, you're going to pay, somebody is going to pay Michael Saylor 10, 20, or 50 times more than his company is worth just to get the Bitcoin. Seriously. And this stock has been hanging out. People gave up on it. You know, the Bitcoin ETF is here, so who needs this? Well, I'm going to tell you who needs this. You can't do a corporate takeover of a Bitcoin ETF. So keep an eye on MicroStrategy for ideas about the health of the market. Galaxy moved before all these altcoins and Bitcoin on this latest ramp. Coinbase's stock. Coinbase came out around 350, tanked, tortured everybody, lawsuits, etc. Now back at 350. So is today an emotional move where everybody gets out where they originally FOMO'd in? Or does this equity trade in crypto, does trading crypto through stocks have another leg? A lot of products, a lot of coins, Bitcoin, ETH, Solana, DOT, everything overcame their highs from back in May. Why should Coinbase be any different? Everyone's going to figure out inflation is going to be 10% forever. And what's the best holiday gift of all, other than a tokenmetrics.com subscription? Crypto itself. So everybody at some point piles into Coinbase. I'm guessing that's when ETH prints 5K. Speaking of ETH, I think if ETH prints 5K, it may go to 5,900. We'll work with Forrest later. DeFi on ETH is on fire. Stay tuned to find out where else it's on fire. Silver. You're like, silver? Really? Yes. Because silver and ETH, they go together. They have a mathematical relationship. Silver should have gone down when the jobs report was so good, yet it's going up. And it's making a possible head and shoulders bottom, which means that all this talk about money printing and Fed governors leaving and all this stuff, I don't know. It makes me want to buy crypto. It makes me want to buy precious metals. Precious metals may have a huge catch-up trade, and if they don't, I don't care. This chart means ETH is going to lead. Now, speaking of leadership, we'll talk about this more, but which coin is going to move the way ETH moved in 2017? Solana right now is at, 250. It could easily go to 280. All right. And there's talk that ETH was at the same price in November of 2017. So right around 250. And ETH wound up at 1,500. So the question is, can Solana go to 1,000? Is that something anyone's even talking about Solana moving like ETH? Or is there another choice that may be out of consensus for which altcoin, which layer one is going to move today the way ETH moved back then? Please stay tuned for that. Meanwhile, an underrated theme is developing where Bitcoin Cash is now running with an Ethereum fork, and BSV developers are working with Solana. Wouldn't it be hysterical if the next SHIB was DeFi on Bitcoin? So Bitcoin Cash has got no resistance until 800. I've brought this up before and been humbled by this sideways motion. But remember, if I had brought up SHIB 2 months ago, you would have left. Because these ranges, it's so dead that, trading doesn't pick up until it picks up. BSV is even worse, right? I don't know how they would do it, but if BSV and Solana can get DeFi going on a Bitcoin-esque blockchain? What's the next SHIB? I don't know, but that's the SHIB formation right there. If you love both Bitcoin and smart contracts, you don't have to compromise on either, according to CryptoDog. Is that a paid promotion? I don't know. But he's pointing you towards a coin called Sovereign, which is DeFi on the Bitcoin blockchain, as I understand it, not investment advice, right? So it's not like Badger where it's, running on, say, Ethereum. This one is you keep your keys, you stay on Bitcoin, and you can do DeFi. I will leave it up to the technology experts to figure out whether or not that works or doesn't. What I do know is that Sovereign is up today. Yes, it's at resistance at 26, but this thing was all the way up at 50. So DeFi on Bitcoin. Is it going to make you $1 million tomorrow? No. What am I trying to teach you? I'm trying to teach you out of consensus thinking. In other words, nobody thought SHIB would go up, and it did. Okay, lesson learned, no big deal. What's the next out of consensus idea? And if you catch that, it could move the way ETH moved in 2017, because we may be late in the cycle. There could be a parabolic move, but it may not be in what everyone thinks it is. Chainlink is another idea. Yes, I know on Thursday I said Chainlink in the middle of the range is not that interesting. Now, it's approaching resistance at 37. So do I have green candle bias? In other words, am I seeing green and getting bullish? Probably. But if some of the themes that me and Forrest have talked about, where it's ETH, Solana, and etc., we'll talk about that later. Maybe this whole idea that Chainlink is connecting everything makes Chainlink worth 45. Or maybe Chainlink can just end this endless range trade and break out. I know the Link Marines are out there. I know big YouTubers are calling Chainlink a long-term hodl. So no one was interested mid-range, including me. Now I'm starting to wonder whether this thing can actually break out. Polkadot. We'll cover Polkadot multiple times in the stream. I waited till later on this round because everyone comes in late and then says, what about Polkadot? Because I did it too early. Polkadot is hanging out above 48 and it's probably headed for 58. We'll cover it later in Altcoin Overtime because I know we're going to get there because I know you're hammering on that like button. But Polkadot looks like it wants to take the baton from Kusama, right? Kusama's done its thing. It's still awesome, but it looks like everyone's coming out of Kusama and they're coming into DOT. And I still believe, even though I've said it on multiple live streams, I'll say it again. Total crypto market cap is going above 1 trillion. Total altcoin market cap is going to stay above the number 1 trillion. It's got to be Polkadot along with Solana and one other. Now, let's talk about one other. So this is sentiment indicators from tokenmetrics.com. Yay. Everyone is bullish Solana, ETH, Bitcoin, Matic, and Chainlink. Okay. Now, what happens if Solana goes to, say, 500 instead of 1,000? What happens if ETH makes an orderly move higher to, say, 6K, but doesn't go parabolic? What happens if Bitcoin stalls at 78 or 79K? What happens if all the total value locked that everyone thought was headed for a layer 2, like Polygon, goes somewhere else? Where might it go? Well, ladies and gentlemen, Avalanche, right? In other words, it's either Solana to 1,000 or it's Avalanche to 150, and that could be conservative. Now, I didn't even scroll to find out where it can go because AVAX could wind up being the Ethereum of 2021. So I know this is a little bit complicated, but try and follow this. So we're going to equate what's going on now to what was going on in 2017. All right. So Bitcoin today is kind of a slower moving traditional instrument, like the S&P 500. So if you don't know what to do in stocks, you do S&P. If you don't know what to do in crypto, you do Bitcoin. Now, Ethereum, slightly more exciting for obvious reasons, because it's both money and technology. It's the cutting edge, just like the NASDAQ 100 or the FANG stocks, right? Back in 2017, it wasn't obvious that the FANG stocks were going to take over the world. It was sort of, it was bullish, but it wasn't like, you know, oh my God, you know, it's not a secret that it was going to go up, right? So ETH today is like NASDAQ back then. Just like Bitcoin today is like S&P back in 2017. Now, what's the new Bitcoin? Remember, in 2017, you may have known about Bitcoin, but the larger world didn't. It was like the new hot thing. It was like, oh my God, what is this? Right? And it just exploded. It went from 5,000 to 20,000 in a month or two. Now, what could have that level of excitement today? What's the hot new thing? Where's the play to earn? You know, where is the metaverse? Where are smart people on Twitter combing through like dexes? I think Solana today could be like Bitcoin back in 2017. Like if it's reasonable for Solana to go to 500, everything always goes farther and overshoots. So there could be an overshoot in Solana. Now, one example that may be a little bit confusing, but Solana is basically trading at the same price ETH was back then. So there is a case for Solana to just literally become like the new Bitcoin and just go up the way Bitcoin or ETH did back then. Now, if Solana is the new Bitcoin, what's the new Ethereum? What's the new hot thing? Everyone knows it's hot, but they don't quite know how hot, right? Like Ethereum went from, 200 to 1,500. So what's out there that could do that? And our answer to that is Avalanche, not investment advice, right? In other words, if this cycle is going to have a blow off, it's probably going to be led by Solana and Avalanche. Because remember, they got to add $1 trillion to total crypto market cap. So that's got to be Bitcoin, ETH doing some of that, but there's got to be big chunks from DOT, Avalanche, and Solana. And maybe, heaven help us, sheep. And that, friends, is the market update. Forrest, how we doing on comments, man?
Yeah, we got a lot of people joining the stream, and only more are going to join if everybody hits the like button. It really helps the YouTube algorithm push out the video to the thumbnail so that more people will see it. And if more people see it, more people click on it, more people join this stream. Yeah, we're doing pretty well though.
All right, excellent. All right, so I'm going to work on altcoin overtime, keeping one ear on what Forrest said. I did see a comment. Is GNO still a buy? Not investment advice, but I've got resistance. There may be more upside elsewhere. So I know I said the market update was over. Now it really is over. Over to Forrest.
You know what? Actually, Bill, we're going to have to do altcoin overtime a little bit earlier, at least the first part of it, because I'm in the incorrect browser and it's not going to allow me to share my screen. So I'm going to have to drop off and I'm going to come back in about 2 minutes. So I'm going to spring altcoin overtime on you guys early if that's okay.
Oh, my God.
I'll be right back.
All right. So I will hang out here. I know everyone's thinking DYDX out there. I think things like DYDX and the graph not investment advice. I don't have the charts up right now, but I seriously think that a lot of these higher quality altcoins, they're going to have one final run, right? It's either going to be while Bitcoin hangs around 65K now, or, you know, later in the month near the American holiday, because a lot of times there are gap moves in the market around American holidays. So we hear you out there. Keep commenting. We got a guy watching it. We want to get more interactive because we want to help you. We want to personalize it for you. Now, Altcoin Overtime, Sushi Swap. You know, I feel like I could almost write, like, I don't know, a poem about me and Sushi Swap. You know, I didn't shut up about it for a month, and then I pretty much got told to shut up about it because it didn't go anywhere. Then, as soon as I gave up, what happens? We see smart money start piling in. They started piling in around 13 to 14, and I'm like, well, that's real interesting, you know, because Sushi Swap dropped like a rock for 3 days. Now I'm like, I don't know. Did they know we're all looking at what smart money's doing? Did they pump it, then dump it on our heads? So that's why I waited. And a lot of times what I see in altcoins is consolidation below resistance. Like, I know you're supposed to buy support, but the market's done nothing but go up all year. So what happens when something gets to resistance and then hangs out just below resistance? Well, Sushi Swap is hanging out below 13.
Hey, Bill, can't see your chart. I think it might be because I interrupted and shared my screen, probably messed you up. Sorry about that.
No problem. Okay, so there's the Sushi Swap chart. There's Sushi hanging out below. Now, I'm going to do this in probabilistic terms. Okay? Probabilistic terms. If Sushi Swap, if this was anything other than Sushi Swap, I would be like, take a shot at the dip because it could break out. And Sushi could break out. So if you want to take a shot, that's okay. Personally, I would wait. Not investment advice, but I want this thing to prove itself. I'm like, you know what? I got hosed on this. I got chopped up. You know, show me the money. Show me that this thing can take out 13, and then I'll just get crazy bullish the whole sector, as in the whole DeFi sector. Like, I will believe DeFi 2.0 is on across multiple platforms. Now, we're going to go through that in a minute anyway, but Sushi can show me the money. Now, what we're going to do is I'm going to interrupt Altcoin Overtime to go back to Forrest, if that's all right. But one thing I'm going to do first is just tell you that VeChain just bounced off a key GAN line. It's tried to break this line 3 times. And there is so much supply chain mess out there that I think this just trends higher. It's going to head for 17 cents. And I just think it's going to trend higher until either something bad happens to the market. And if nothing bad happens to the market, VeChain is just going to keep trending higher. Is it going to 100x? I don't know. But, you know, VeChain did go from 10 cents to 24 cents back in the day. So if you long VeChain, I say stay with it. Now, I'm going to stop sharing, okay, and turn it over to Forrest. All right. Forrest, let's talk Bitcoin. Let's talk what you're seeing in DeFi, right? We're gonna have like the conversation. So take it away, my friend.
Yeah, so following up Bill's excellent presentation and talk about AVAX, I want to talk about why I'm actually getting increasingly bullish on AVAX and Avalanche ecosystem. So first, I just want to, we're at DeFi Llama here, and we're looking at total value locked. So all the value that is locked up in DeFi, right? Total value locked in DeFi. Right, you can see it's starting to move exponentially again. We had this big exponential run all the way up to over $150 billion. It crashed a little bit, consolidated, and now it's on the move again. Now, let's break this down just a little bit and follow the money. Where's this money actually going in? Well, if we look at Ethereum's starting to go vertical. Yep.
Reset that real quick because it's stuck on the other window.
Yep. Is this working now?
Yeah, you're good.
Cool. All right. So we're in DeFi Llama here. And if I look at all the total value locked, it's on the move again. It's moving. It's making all-time highs, $272 billion, over $272 billion. If we go to Ethereum, we see Ethereum starting to move vertically again, right? We just popped up in the last couple of days from $171 billion to $182 billion it locked in Ethereum. Very bullish for Ethereum, right? We've been talking about Ethereum for all year long, but especially in the last couple of months about how much Ethereum supply is getting burned and why we're so bullish on it. But not only that, we're seeing TVL in DeFi increase again. Let's go to Solana. Actually, before we do that, let's zoom in on the last month of Ethereum. In the last month, TVL on Ethereum's gone from $142 billion to 182. So about 30 billion, no, basic math here, Forrest, $40 billion coming into the Ethereum ecosystem in TVL. Let's go to Solana now. Guys, I'm bullish on Solana, right? This is not to say Solana's lagging behind, because you're going to see it's not. TVL is increasing. It went vertical. It went exponential on Solana's like initial big run up in September, and then it kind of crashed and it's creeping back up. And I say creeping, but if we zoom into the last month, we're actually going to see that it's gone from 10.5 billion to 15.15 billion. So about $4.5 billion has been locked into the Solana ecosystem in the last month. Right? How big of an increase is that? Roughly 50% if we're doing ballpark math. Now, Polygon, interestingly, is kind of bleeding out in TVL. Phantom, right? Phantom had a big spike up and is consolidated and is starting to move up aggressively recently, but $5.43 billion up to $6 billion in the last month. Still a nice increase, but not as much as Solana, not as much as Ethereum. Now, if we go to Avalanche, and we follow the money, you see Avalanche is continuing to move vertically. It kind of topped out at $8.65 billion, consolidated, and now is moving vertically again. If we go over the last month in Avalanche, $5.07 billion, so just about $5 billion even, to 10.03. So almost exactly $5 billion has come into the Avalanche ecosystem in the last month. $5 billion in TVL. How much went into Solana over the last month? $4.5 billion. So Avalanche, in terms of both absolute value and percentages, is in terms of TVL is actually growing faster than Solana. And the reason I believe that's happening is because Avalanche's UI and the dApps that have been built on it, their UIs make it really easy to use. I've been starting to use Avalanche, staking some money on Wonderland, taking loans out against interest-bearing assets on Abracadabra, trading on Trader Joe. It's a very pleasant experience, and the gas fees are very low. Obviously, gas fees on Solana are very low as well, but Trader Joe's, or I mean, not Trader Joe, but Avalanche in general kind of gives you that Ethereum experience that UX and UI experience of Ethereum, right, that we're all kind of used to, and can easily adapt from if we've been using Ethereum dApps over the last year or so. But it just feels faster. It feels smoother. It's really nice. Not only that, they do have a bridge that they will airdrop you Avalanche AVAX when you bridge over your Ethereum from the Ethereum ecosystem over to the Avalanche chain. Right? So you immediately have a little bit of AVAX to use for transaction fees. So it's just a very nice user interface, very good user experience. And we're seeing a lot of money flow into that ecosystem. Right? If we look at Solana, I believe it's fully diluted market cap. It's not here on CoinGecko. Fully diluted market cap's around $125 to $130 billion. For Avalanche, it's $65 billion. Right? We just looked at the TVL. The TVL on Avalanche is $10 billion. The TVL on Solana is $15 billion, right? So despite only having 33% less TVL, Avalanche is valued at roughly 50% less of a fully diluted market cap than Solana. So I think there's some delta for Avalanche to actually catch up. And if you just look at the price action here, we had a very, very big increase from $3 all the way up to $60 before crypto crashed, and we got this big correction. But now Avalanche has been on the move again, right? And if it stays within this trend pattern over the next couple of months, by the end of January, and I'm not saying this is when it's going to peak, but if it can stay somewhere in this pattern, we're looking on the low side support around $30 to $70, but high targets in a nice blow off top scenario, not even a blow off top scenario, but just returning back to these price targets. We're looking at an AVAX price of $200 to $300, right? If we can talk about Solana potentially moving to $500 to $600, we can absolutely, in my opinion, talk about AVAX moving to $200 or $300 because they've made it very, very easy for money to move over from Ethereum and into AVAX, into the Avalanche ecosystem. Now, I also want to talk about Bitcoin. I want to break down kind of the price action we've seen out of Bitcoin. If we zoom out here, and I've got a lot of stuff on this chart that we're going to dive into in just a second. We're on the daily chart. You can see Bitcoin popped up, found support on top of its 3x and 2x margin pressure levels here, right? And the next big margin pressure level for resistance is up here at $79,200. Now let's cut down to the 4-hour chart, zoom in, and actually look at what we've got going here for Bitcoin. So I want to give a little Bitcoin recap on this correction and why I'm becoming very bullish, or have been really since we made this bump and run pattern down here at 59.5, 59.6, bullish on Bitcoin. Right. So we had our top here. We had our all-time high, right? We broke down and we made a low, right? Then we made a lower high. Then we made a lower low. This is where we kind of bottomed out at. We found support. They tried to take it below the margin pressure levels, but the margin pressure levels ended up holding as support, right? And we know that our 3x long margin pressure level here at 59.5 held multiple times as support. So Bitcoin has actually built a very, very nice base of support here, right? Now, this has been kind of frustrating, kind of boring to watch as Bitcoin comes down to test it. It's a little bit nerve-wracking. You're like, is this going to correct all the way back down to 53, right? So it's been a little bit nerve-wracking, but throughout this process, it's been chopping around and building very, very nice support here. Then what we saw happen, right, on our way to make this last lower high, right? We had our high, our lower high, and then our last lower high. Right. On our way to make this, we broke through the downtrend. This little green check mark signifies that, right? We broke through the downtrend, and then we came back down to make a higher low. That is bullish, right? Hence the green upwards arrow, right? Then we made a higher high. We broke through 63K, which was our previous high. We made a higher high, and then we made another higher low. Now we've pumped, as of earlier this morning and last night, to 66.5, which is yet again another higher high. Now, there is a bit of resistance here in this trend line, and really that's what's holding Bitcoin back from going higher. It's running into resistance on this trend line, and then we've, of course, got this bottom trend line down here, which we could even move upwards into this area. Now, the question is, right, if you didn't buy on these margin pressure levels, right, which admittedly is a little bit risky. Kind of the lower risk trade would have been to buy on this margin pressure level after it started pumping and making a bump and run pattern, right? This would have been the ideal place to buy at around 59.5. But if you didn't buy there, how would I trade this? The question is, how would I trade this if I didn't get in earlier, right? Well, personally, I wouldn't force a trade with a bad risk to reward ratio. TradingView has this nice risk to reward ratio trade, calculator. If we want to go long on Bitcoin, which I think in this position, we do want to go long on Bitcoin. I think we don't have serious resistance until $79,200. Now we're hitting a little bit of resistance right now, but in terms of this macro move, I think Bitcoin can go to $79,200. We have this bullish reversal pattern. This could even turn into a cup and handle, right, and go higher, right? So watch out for that pattern manifesting. But where would I look to trade Bitcoin? Now, Bitcoin could just continue to rip up, right? There's nothing saying that this has to come back down. But I think there's a strong case for it to come back down because we've now made our higher high. And now we could reasonably come back all the way down to 64, 63, or even a little bit lower and still make a higher low before heading back up. And that would still maintain this bullish higher high and higher low pattern. So instead of forcing the trade and buying this breakout and having the risk of potentially a 7, 8, 9% drawdown, which on a leveraged trade can be very painful, I would be looking for a more optimal risk to reward ratio. So if I'm going long here and with a take profit target of $79,000, where would I want to set my stop loss? Well, I'd want to set my stop loss down here, right? You could argue for setting your stop loss at this point right here under this $60,000 because that would create a lower low. And that would be a bearish sign. But the reason I want to set it a little bit lower in this case, and I actually want to set it below this structure here of around 57.8 is because we do still have these very strong support margin pressure levels. So even if Bitcoin did come all the way down and make a slightly lower low, which would be bearish, it does have very strong support at these levels. So I wouldn't want to get liquidated and then just watch Bitcoin bounce all the way back up. If I'm going to get liquidated, I want Bitcoin to force me to get liquidated. I want them to have to take it through the margin pressure levels all the way down here. So I would be setting my stop loss somewhere around 57.7. So now that we have our stop loss, we can also look at our entry point. Where's our entry point? Well, I think that Bitcoin could reasonably come back down to this previous high. That's a pattern we see all the time. Previous resistance turns into future support, right? And if I was going to structure this trade, I'd take my trade allocation and good trading habits. You usually want to trade with, 0.5% to maybe 3% of your total portfolio or trading account at any given time. Now that can change depending on your strategy, but I would decide what my trade allocation for this trade would be. And I'd probably split it up into halves, thirds, and I'd enter here with a half of my trading allocation, my trade allocation. I'd probably add a third or a half here. And then if I wanted to be a little bit more conservative, right, this third entry point, this third point to average in would probably be down here where it's still a higher low, right? But just based off of this trend line here, right? So let's just say for simple math, I was, going to try to go long with $15,000 on some sort of whatever leverage. I'd enter 5,000, but I'd go long with 5,000 here. And if it dropped, average in another 5,000 here. And if it dropped, another 5,000 here with my stop loss set down at 57.6. Right. So when you start averaging in and you ladder in on your trades, you're not necessarily always going to hit the lowest ladder. And that's actually a good thing, right? If it bounces off 63K, you get $5,000 in and you never have to go underwater on this first entry. That's fantastic. That's fantastic. It's just, hedging against the risk of Bitcoin, continuing to drop through, and you're not putting all $15,000 into the first entry point, right? Or the most bullish scenario. So you can see that if we were to get our entry point at 64, this is actually 64,200, we can calculate our risk to reward ratio based off our stop loss. It's 2.28 because our reward is at 79, our take profit target's at 79,200. So this is a 2.28 risk to reward ratio trade. And usually you want to keep it above 2 as a rule of thumb. Now, some people are going to have different strategies. You can, tailor this depending on your strategy, but usually your risk to reward ratio above 2 is pretty ideal. Now, if we got the second entry point, if you're a little bit more greedy with your entry point, all of a sudden, if you can enter at $63,000, your risk to reward ratio goes to 3. I know you guys probably can't see that very well. That's a 3.1 risk to reward ratio. And if you were patient and waited for an entry all the way down here, you're all of a sudden getting a risk to reward ratio of 4.57, which is very ideal, right? But if you averaged and got an average price of, say, 63K, you're getting a risk to reward ratio on this trade of 3.1. Now, this is not financial advice in any way, shape, or form. I want to make that very clear. But if this is personally how, if I was looking to go long on Bitcoin, and I'm bullish on Bitcoin right now, we're getting this bullish structure, this is where I would look to enter. This is how I would structure the trade. I'd break it down into thirds. I would ladder in at 64.3, at 63, and 61.6 or so if it comes down that low. Now, there's no guarantee that it is going to come down there. It might rip up and you might miss the trade, but it's not smart, in my opinion, to force trades that have bad risk to reward ratios. Because if we enter right now, you can see it just went red. It just went red. Why did it go red? Right? Because the risk to reward ratio all of a sudden now is 1.42. That's not very good if we enter up here, right? So we got to be patient, right? So that's a little bit different content coming at you today, kind of showing you how I would personally structure a trade on Bitcoin right now. If you enjoyed this content, please drop a like. It really helps the algorithm push this live stream out there. And I'm going to cut back over to Bill for more altcoin overtime.
All right. Thank you, Forrest. And thank you, Samuel, if you're out there and you're still watching, because you may be wondering, gee, what could create a dip in Bitcoin? You know, the market's all green Monday, November 8th, as you're watching this. What creates a dip? Well, the infrastructure bill is about to get signed, and it does have that nasty crypto tax thing in there. Now, I know the crypto industry is going to fight it, but it's out there. And all it takes is for one person to say something, and you might get the dip. I know someone else was asking about entry points for AVAX. Let's try to cover that. Let's see if I can share my screen and go back to altcoin double overtime. So hit like, subscribe. Don't forget to sign up for alerts. We have a Thursday stream. And without further talk, here comes the Avalanche 89-minute chart. So if you're watching this 4 days from now, I'm sorry, this will probably not be relevant. But if Avalanche is above 91, I think you can say the trend is intact and you're just going to have to go with it. That said, I've noticed as the cycle matures, 50% retracement levels have been good. Like 62 is optimal for health. So is Avalanche going to get all the way down to 81? I don't know. I guess it'd have to be a pretty red day. I would think, you know, my equivalent to what Forrest was doing with Bitcoin for Avalanche might be something like 87, 84, 81. With that 50% retracement of the big move up at 84 being a possible entry point. Now, I know someone is out there asking multiple times in the comments for Phala. I hear you. I worked on it. Obviously, I'm not familiar with the fundamentals, so not investment advice. This could be a diamond formation. So it's this like gigantic, you know, broadening volatility formation that has 2 points at the end. Frequently, when you have a diamond formation like you had in DOT in the low 30s or mid 30s, you can get huge breakouts and huge breakdowns from this formation. Now, since the first move in this coin was higher, and since it seems obvious that sellers are kind of sitting on it, right? They're kind of like, you know, every time it goes to $1, they hammer on it. That said, I've seen this before, right? Sellers do what they have to do what they have to do what they have to do. And then when they're out of ammo, it goes. So if this thing is above $1, you can go with it. If you're stuck or a bag holder or, you know, you want to wait, I would say, you know what? If it's above 70 cents, non-investment advice, wait. Because the reward on any upside catalyst could be pretty good. Now, ICP, Internet Computer Protocol, interesting. So this was a lot higher. It got completely hammered. And now it's done this like sideways basing formation. I've seen before where the same GAN lines that created a failure in September, many coins are now starting to sort of like glide through that diagonal resistance. So to keep it brief, in ICP, I've got 4 green candles or 3 green candles as of November 8th. So something is probably building up here for this thing to try to go higher. Now, if you get a big red day, maybe that's a chance to take a shot. Why? Well, because you know what? It's not a bull market, folks, unless you can buy a dip and make money. This is really what Forrest is trying to tell you. philosophically with the great precision analysis on Bitcoin, right? If it's really a bull market, you should be able to get a dip, buy a dip, and make money. If you can buy the dips, even if they're scary, and make money, then it's a bull market. And I would apply that to ICP. Now, people asking for Mana, Decentraland, absolutely, I'm covering this. This is a test of my theory as to whether or not 265 or 50% retracement levels matter. In other words, can you buy the dip in the metaverse, right? Like 1 minute the metaverse was everything. Now I feel like no one's talking about it, right? And people should be talking about it. This is not over. Facebook is running metaverse ads on American football games. And this trade, maybe there's tax loss selling in certain NFTs, but if there's tax loss selling in NFTs because some people got caught, the next time people go to do a trade, they will think about their NFT and how it relates to gaming and the metaverse. So people who lost the first round on NFTs, when they come back, I think they're coming back in the metaverse. I'll test to see if that theory is right. If Decentraland holds 265, if Decentraland went to 211, that's a 62% number. That's not on the chart. But frankly, if it attacked 2, it would be Christmas. Cardano. Yes, there's Cardano people out there in the comments. I hear you. I whipped up the chart. Believe it or not, even though this thing has been vertical for a while, this consolidation, I'm sure, has been annoying for people. I'm sure. And today's move looks like Cardano trying to break out of a triangle like Galaxy Digital near the apex of the triangle. So it looks like Cardano can take out 221. And if the market is capable of adding $1 trillion to total crypto market cap, technically Cardano could go to 3. It could possibly make a new high. I mean, if everyone's buying dog coins and the next day everyone's buying cat coins, then you know what? Cardano doesn't look so speculative anymore. Cardano almost looks traditional. And I don't mean that in a negative sense. So Cardano may be a beat up blue chip in a world where everyone's speculating in cat coins. Clearly, Cardano, even though it's much bigger, probably could have another speculative wave to it. I mean, if everything is going to go up over the next 4 weeks, right, assuming the crypto tax bill doesn't wreck crypto, because after all, that doesn't make for a very interesting live stream, right? Crypto destroyed. 2-minute live stream. No, we don't do that. We want to give you the content. We want to keep the hope for crypto alive. So Cardano can get to 221. Okay, Sandbox. So it went up. It wouldn't go down. And then it did go down after it moved to 280. And I'm hoping, I'm going to be patient that Sandbox is going to get to the 50% retracement somewhere near 2. It's probably going to find buyers in advance of 2, but I'm guessing that that's where it could go. Maybe it's 237. One thing that's really annoying about bull markets, and please remember this, bull markets can be annoying, right? You miss it, then you think you're going to buy the dip, and then it doesn't dip all the way to where you think. So bull markets are not vacations. Sandbox, I'm guessing, is either going to bottom at 237 or 2. And if you get a shot below 2, then I think you have to take that. Because that's where everybody was kind of, in a big hurry to sell because they got like a 4x out of it. I think the metaverse is way beyond the 4x that you just saw. I mean, in my mind, somebody bought Ethereum at 50 cents and sold it at $2 saying, wow, I got a 4x. And where are they today? Band protocol. Now, I'm interested in this. There was a big move in UMA. I'm interested to see if Band protocol in any way can connect or be affiliated with Solana or AVAX or any of these other ecosystems. So Band Protocol, you know, tried to get above 18 twice, 2 or 3 times. And I'm wondering if it's building steam to go back there. Okay, UMA did something similar where there was a huge moonshot from 16 to resistance at $18.70. Taking a GAN approach to this, if UMA can stay above $16.70, UMA and Band may go up together. I'm certainly loving that they actually, you know, got this bump up in these coins. They've been kind of, I don't know, you know, they get hot, then they get cold. These coins to me are interesting, right? So if you want to play something conservative, try Band or UMA, or at least look at them, not investment advice. Now, somebody was asking if GNO is still a buy. Well, our AI has been all over this in the portfolios. Okay, for those that don't know, our sponsor, tokenmetrics.com, basically aggregates the top rated coins and then adds them into a portfolio so that you can be diversified and hold 5 or 6 coins. GNO has been featured for weeks, and this thing has recently mooned from 480 to 640. Now, I'm not going to get in front of this, but I think it may be time, especially since this started at 200, right? So you get the 3x in a really big coin. If it takes out 640, it's just gone. But it may be time to ring the register here and think about, I don't know, other forms of DeFi, Avalanche, Decentraland. In other words, if you made a ton of money in this, it may be time to put some of that money to work elsewhere. Now, let's just totally focus on Solana, because I know I was maybe all over the place with the 2017 analogy. So I think one of 2 things is going to happen in Solana. Solana is either going to do what ETH did in 2017 and go from 250 to 1,000 or higher, or Solana is going to be like Bitcoin and do like a, I don't know, like a 3 or a 4x, right? Or maybe a 2x to either 500 or 800, while something like Avalanche or something we don't even know about yet goes wildly speculative. You have to really be careful that if there's no material dip off this infrastructure bill, you cannot be a crypto hedge fund. As a matter of fact, folks, I don't think you can be a hedge fund at all if you don't have Bitcoin, Ethereum, and Solana on your books. It's called window dressing, right? In other words, you need to show your investor at a year-end report that you've owned some of the biggest winners of the year. Something people really don't understand in crypto. It's very popular in legacy. You'll see some of the biggest winners appear and go up a lot at the end of the year because people need to show they own them or own more of it or whatever. And then there's an ensuing dump come January. Now, that's a conversation about the market cycle, which we will have later because we're going to have Forrest weigh in on that because, as usual, Forrest has a surgical answer to where are we in the cycle. Trader Joe, okay? Interesting formation here, right? Up, back down, up, back down, up, back down. Longtime readers will know that that's a coiling formation that could sometimes lead to a really big move. Okay, so Trader Joe, you know, could be and could move like Uniswap of old. And that is the halftime for Altcoin Overtime. So what I want to do is set up a conversation. Okay, here's the conversation. And everyone, especially in our premium groups, is always asking us this. And we're going to try to bring a detailed conversation to today's stream. Where are we in the cycle? Where is crypto in the cycle? Now, from my perspective, 2 months ago, everyone was like, I can't wait for the bear market because the cycle's almost over. So everyone thought the decline in September was it. And I don't know, I really wasn't disagreeing. But frequently, as Forrest work taught me, frequently there's a blow off top at the end. Now I'm listening to people tell me that perhaps this cycle, there is no cycle, right? There is no spoon. First it was over. Now it's not over. And then it's never going to be over. So the question is, where are we in the cycle and how do you move about in November, December, and January? I gave you like the old-fashioned equities version where it's kind of like buy the winners, sell the losers, and then sort it out in January. Forrest, I know you got thoughts on this, so why don't you take it away on that and tell us what you're thinking about the cycle as best you can?
Yeah, so personally, from how I'm actually managing my portfolio, I'm trying to operate under the assumption that we will get some sort of blow off top or peak in December, so that I'm actually making sure I'm taking profits and paying myself in December, and we can reassess the market along the way in different chunks of time. As time moves on and we have more data, we can then reassess the market. But I need to make sure that I pay myself before year end, because from some analysis that I've done and just some theories that I have, like I've gone back and looked, and this is anecdotal. I haven't pulled hard data sets, but just looking at the S&P 500 and looking at the stock market over the last 30, 40 years, when you have a big bullish year where you start in January and it's only up and it's a nice smooth, pattern of the S&P 500, the stock market doing well for the entire year with minimal damage, minimal dips along the way, usually you get some sort of instability in the market in the first quarter of the next year. At least that's what I found from my analysis. And my theory, and again, we're moving into this gray area of speculation, and not as hard of a scientific approach here. But my speculation is that has to do with either your theory of kind of padding the books a little bit, making sure that you bought the winners and you sold off some losers, but also for tax implications. Because if you bought in January, and we saw a lot of volume come into the crypto market in January, February, March, if you were investing in those first 3 months, in terms of long-term capital gains, you kind of have to hold until January, February, March. But as soon as January, February, March come around, you can sell at a gain and pay and not pay long-term capital gains tax. There's also a lot of uncertainty with what long-term capital gains tax and even short-term capital gains tax will look like. I'm sorry, if you sell in after a year, you won't have to pay short-term capital gains tax. You'll be in the long-term bracket. There's also a lot of instability as far as what's going to happen with short-term and long-term capital gains tax in the future with the current administration in office. So do you want to take profits now in December and eat the short-term capital gains tax, but actually have certainty about what that tax rate's going to be, versus sit on it and wait for potential regulation to pass in future years or in 2022? Not only that, I just think there's going to be a lot of NFT negative sell pressure, and I'm very bullish on the NFT and the metaverse. Let me back up and make that very clear. I do think the NFT market, especially when Coinbase drops their NFT marketplace and brings NFTs to millions of people, I think the NFTs are going to go crazy. But think about all the NFTs out there that are either illiquid, or you bought them at 5 Ethereum and now they're worth 1 Ethereum, or they've gone to 0. What do you do in December to reduce your tax burden for April? You can sell that NFT that you're underwater on. You bought it for 5 ETH. You can sell it for 0. Now, all of a sudden, the 25 grand profit you made on Solana this year, poof, you don't have to pay taxes on it. It offsets, right? Because you harvested a loss on your NFTs, and now that counts against the profits the capital gains that you made on Solana. So I think there's going to be a lot of harvesting of losers in December. So projects that may not have done well this year and not participated might get hammered harder, right? So personally, I do think there could be some instability in the market. Now, whether that's a full-on, and I'll share my screen here for just a moment. because I like to share this chart, and let me know if you guys can see this, right? Whether that is just a short-term correction in Q1, right? And then it's followed by another rally into the rest of 2022. Yeah, that may be the case. Or it could be a total return to this trend line. It could be a total return all the way back down from some sort of blow off top in January or February, even December, even earlier, right? What I want to make sure that I'm doing is that I'm paying myself. And am I going to abandon my entire portfolio and just get completely out? Well, not unless we just go nuts. Not unless we get to a risk premium that we can't sustain moving forward, or that I don't believe that we can sustain moving forward. But more than likely, if we continue this trend up and we get to a $5 or even $7 trillion total cryptocurrency market cap valuation by December, January, February, I'm going to be paying myself along the way. I'm going to be making sure that I've secured profits. I've secured a profitable year. I'm going to pay taxes on those profits. And I'm going to not subject myself or my entire crypto portfolio to a return back down to this trend line. Because a return back down to this trend line is pretty devastating. It's pretty devastating, especially if it's from a high valuation. That's 79 to 80%. That means most altcoins and NFT projects go to zero. That means Ethereum and Bitcoin see 60, 70% drawdowns, right, in a bear market. That's what happened back in 2017. It's what happened in the previous market cycle before that. And it's what nobody thinks is going to happen. They say it's different this time. It's different this time. Well, when you get a big blow off top, and we see a lot of money come into the space all at once, it incentivizes profit taking. There's some instability, and all of a sudden everybody's getting liquidated and it crashes back down to the trend line, and you're in a bear market for a year or two. It's just how it's worked in the past. And while it may be different moving forward, and it's not guaranteed, history is not guaranteed to repeat itself, I'm going to operate under the assumption that there's a strong chance it will. And I'm going to treat my portfolio accordingly. Whoops. Sorry, guys. We went into the matrix there. When I cut back over to the studio view, it just boom. But I'm gonna cut it back over to Bill and stop sharing my screen here.
All right. So is this time different? Well, we don't know. All right. But what Forrest is telling you is, on big green days or big green weeks, like you can hold trades, you can take a shot at Solana 500. All right. You can take a shot, shoot your shot. But one thing we've been telling people is the way to make sure that you can participate in upside is to have that higher quality altcoin versus the lower quality altcoin. In other words, if the market goes up, the high quality stuff's going to moon. But if it goes down, the low quality stuff will get killed. And the higher quality stuff may come back if it's a brief correction. So high quality that survives a short-term correction versus super speculative stuff. Yeah, you might make money, okay, but you might also get killed if this crypto tax thing rears its ugly head. Now, Kusama, back to Altcoin Overtime. Kusama went vertical so far in November from 360 to 520. Looks like people took profits today. No big deal. There's resistance at 520. To me, even though I've been a big, buy resistance kind of a guy, or buy the dip underneath resistance, you can try that in Kusama, but I'm wondering if the money is better spent on Polkadot itself. So Kusama's been an incredible trade. It's its own universe. I couldn't have imagined when I started talking about it with Hey Maddie and Ian when it was at 21 that I'd be talking about it at 530, a year and so later. Phantom, okay, big breakout above 250. It was at 3, I think, the last time I looked at this. Lo and behold, it goes back to 250. So even in the high quality stuff, even in Phantom, you've gotten dips. Now it looks like a momentum trade is on. If this layer 1 push with ETH continues, then I don't see any reason why Phantom can't go to 4. I don't know how total value locked is doing on Phantom. Okay, probably not as good as AVAX and ETH, but I don't think that's going to stop the speculators from possibly taking it from 3 up to 4. Now, Ren, possibly the most constructive story and simultaneously the most annoying price action ever. Ren went down. It was a great leading indicator for DOT. Then DOT's been holding while Ren's been falling. It would be kind of classic to see this break below $1 as kind of a false breakdown. So it's interesting, right? Chart doesn't look good. Therefore, you should think about investing. Wait a minute. That doesn't make sense. You're right. It doesn't, right? Frequently in crypto, you've been paid to buy dips after it's hit resistance. That's counterintuitive. And I'm wondering in Ren whether it makes sense to buy it when it looks awful, betting that there's going to be a break back above $1 and possibly $1.10. I mean, Forrest was talking about risk reward, right? If there's support around 90 and you can put a stop below 90 cents, you know, your reward in Ren, if the thing goes to like $2 or $3, the way we saw Phantom, all these other layer ones did something similar. If Ren has a layer 1 capability or the interoperability story picks up as Polkadot, or if Polkadot smokes higher, it's worth it to keep an eye on Ren at $1. Now, Moonriver, kind of an incredible candlestick today, making a new high and then coming all the way off. Now, this is obviously an amazing trade that's happened this year. And clearly, people decided to harvest some gains on a rush up to 500, which is an even number, and that makes sense. So, yes, I'm presenting the Moonriver chart, but I'm not saying much about Moonriver. It looks, you know, it's on an uptrend, and it's at resistance. I think there's less resistance on the Polkadot chart than there is in, say, things like Moonriver and Kusama. So I think, not investment advice, but DOT may be the better bet. XRP. Yes, XRP. Went to resistance at $1.18. It's had trouble with this level before. It comes off, but it comes back. Now, this could be the power of crypto YouTube. Or what if the next SHIB was XRP? I thought that to myself. In other words, yeah, there's a lot of people who like it, but there's also a lot of people that hate this, and Americans can't get access to it unless it's on a DEX. So I'm like, wow. Wouldn't it be funny if the final shocker of 2021 was XRP? Not investment advice. I know big YouTubers are on this, but there's a surprise out there somewhere. There's always a surprise. Hopefully it's not down, right? Hopefully the next surprise is up and more than we think and in different coins than we think. Now, I know people have been asking for Matic. Total value locked in Matic is falling. It looks like DeFi money is going somewhere else. Now, that doesn't mean to say that Matic couldn't get to a technical target of 295. Is this another 2 or 3x? Probably not. It's probably just an orderly uptrend to 295. Now, FTX, FTT. Keep wondering about this. Real solid bounce over the last 3 days off support at 58. This token has been building a base at 58 for a while. Now, remember back what I said about how to have exposure. In other words, have risk on or own coins, not investment advice, if this thing really ramps, while staying away from things that may not do well or may do really poorly if this thing just turns around and goes down. This is one of the coins, particularly with the supported 58, that may be worth a shot for a move to 84. Again, if the whole space is going to take off, if there's going to be, a whole underbelly of coins that moon, like in 2017, back then I can remember things like ETH, Litecoin, Bitcoin Cash, etc. There are all of these like shocker moves. I'm wondering if this coin is one of the shocker or one of the candidates for a shocker move. Chiliz, another test of my 50% retracement theory inside the NFT and Metaverse world. Okay, 47 cents is like 50% retracement of the recent big move up. Okay, 45 cents is a prior high. It's been banging on this old ceiling. So the floor is now the ceiling. And the question is, as we head towards the metaverse, will NFT coins and metaverse coins do better than NFTs themselves, anticipating a flip back to NFTs leading in January, right? In other words, when do you buy the NFT and metaverse coins versus when do you buy NFTs themselves? I'm sort of betting you buy the dip in the NFTs and the metaverse now. And once Coinbase launches NFTs, or once the calendar turns Jan 1, that's possibly like a 2 to 3 week final massive wave up in NFTs. There's probably going to be a third leg. Don't know for the NFT trade, whether it's now or later. But for this chart, watch Chiliz at 47 or 45 cents. Now, on the DeFi front, Luna is trading well. It's taking out Gann support between 48 and 51. My guess is that there's probably going to be one big final moonshot in Luna. In other words, you may get a day where this is up like 20 or 25%, not investment advice. And that's probably going to be an opportunity for big hedge funds like Novogratz and Galaxy, who are buying below 15, to probably take some of their money. That's just a guess, right? Big picture, I think this is one of the alts that you can hold, okay? Let the uptrend develop, buy the dip, I don't know, 49, 52, somewhere in that area, and then wait to see if you can get that 25 to 40% rally. Cosmos. What about interoperability? Everyone was talking about it when Polkadot was moving. Now, no one's talking about it, which is why I want to talk about it. So, Cosmos, support at 32. What happens if this catches fire? In other words, we know what happens if it's just boring and we sit around. But if 32 holds, 67 is possible. Somewhere in here, there's a surprise. Tezos, Cosmos. There have been a couple Coinbase surprises this year, right? Mana, Algorand. This could be one of them. Okay, Near Protocol. A rare example of something consolidating above support. Interesting that they can't bring this down to $9.20. The next level above the market in Near is $19. Now, we do like the fundamental story on this, not investment advice. The big question is, how many layer ones can take off all at once? In other words, is there room for Near, even though it's good? Or is the bid all going to fly into Bitcoin, Ethereum, Solana, Avalanche? There's a lot of people betting on there's room for more and more layer ones as legacy capital. Okay, remember this, the first slide, right? They're going to print 100 trillion and you're looking at 12% inflation every year for the rest of your life. That makes a very compelling case for layer ones that have DeFi. Okay, Illuvium. Our AI has been all over this all year. Matter of fact, not only has our AI been all over it, but our guys that do hidden gems actually found this like before it even came out, I believe. So the question is it over? Clearly, people selling around 1,200. There was like a climactic break of 1,000, created some euphoria. Is there any gas left in this? I'm going to make a daring comment that this thing, everything at this time of year can go farther than you think. So don't fade the momentum trade. Yes, I know I suggested taking profits in GNO. I know I told you don't FOMO and go crazy. Try to buy a dip. That said, our AI has been all over these momentum trades. So even if you take your money and pay yourself, leave some risk on in these momentum trades, particularly as it relates to like Metaverse trades, Metaverse NFT trades that have good momentum. Okay. Pay yourself. Yes. Get off the train. No, not investment advice. Now I'm looking at Atlas. Okay. Really interesting that, it traded a little iffy around 10 cents, but turned around and went higher. Okay. Star Atlas, same type of chart. Okay. Kind of that rounding bottom look on a 12-hour. And it's starting to break out. Now, can it get through resistance at 20 cents? I don't know. But if it does, it's going to probably break the whole space out. So be mindful of what's going on in this play-to-earn gaming sector, right? Like Janet Yellen's on the tape. They're printing money. Today's narrative is Bitcoin. But 4 days from now, we could be back in the metaverse. Because let me tell you something, folks. You get 12% inflation 3 years in a row. You get this administration, okay, appointing Fed governors who are going to print indefinitely. Or if you've got Fed governors leaving because they know that they've screwed up and there's no way to stop inflation. The metaverse, play to earn, and all of that may be people escaping to a new reality. The metaverse isn't the dystopia. You're living in the dystopia because of central bank policy error. Okay. Ticker AURY. Okay. Seen some interest on this. I've seen people that I respect on Twitter literally combing through dexes on Solana looking for interesting plays. This feels a little bit overdone. Okay. I know it's in the gaming arena. If you get dips, the question is, on these metaverse and gaming dips, will there be a chart pattern, maybe the equivalent of force margin pressure levels in these coins? Will there be a fib number or some sort of formula that you can follow that after these things run up, are they going to stop at the 38%, the 50%, or the 62% retracement levels? Holding above 62% on a big dip is healthy, but I suspect in metaverse and gaming, you're only going to see 38% or 50% retracements. In English, that means up, and then instead of all the way back down, maybe just up and a medium-sized correction. Because again, folks, I can't believe this theme is going away. And that, ladies and gentlemen, is Altcoin Overtime. Forrest, you still out there?
I'm here, Bill.
All right, ladies and gentlemen, we appreciate you being with us on the stream. Okay. Yes, I know we ended it on a dark turn. Okay. But we all want to remember, we are all friends in crypto. Okay. We are all friends in crypto, and we are here to help you make money in crypto. Because as we said on one of our podcasts, which you can find on our YouTube channel, okay, how do you protect yourself against inflation? How, if you're a bear, okay, not bear as in bear market, but if you're going to expect hibernation or winter or something may go wrong next year, you better feed while the getting is good. So we want to help you make money while crypto is still in a bull market. I want to thank our sponsor, tokenmetrics.com. I want to thank my gracious co-host, Forrest. And most of all, I want to thank our customers and our listeners for staying with us. Stay with us. This is Bill Noble from Token Metrics TV. We will see you on Thursday.